turn to the move in commodities in the meantime, because crude soaring today as the U.S. State Department orders a partial evacuation of U.S. embassies in Iraq due to heightened security concerns. It's not just crude, though. The entire commodity complex has soared this year. Platinum's up over 35%. Gold, silver up better than 25%. Copper rallying 19% in 2025. Gold has notched, get this, 25 record highs this year. Joining us now is Francisco Blanch, head of commodities and derivatives research at Bank of America's Securities. It's great to have you on. I'm going to start with a move we've seen here in oil, because it does seem that geopolitical concerns and specifically tensions in the Mideast really sent crude higher today. How much is that driving the price versus some of the dynamics we've seen with production starting to come offline in places like the U.S.?
So thanks for having me, Morgan. I do think that most of the move today is linked to that incremental risk from Iran. Remember that we have two major geopolitical risks ahead of us in the second half of the year. One is what happens to Iran. Are we going to get a deal, or are we going to have potentially a conflict? And certainly the evacuation of the U.S. embassy in Baghdad is going to get markets very nervous. The second, remember, at the end of the day, Iraq has a very long border with Iran, right? So, and the other issue is Russia-Ukraine. So those are the two big conflicts that we have potentially to cope with in the oil market. But the market's still in surplus. OPEC is bringing back production, and we are seeing potentially slower demand in the second half of the year on the back of tariffs. So I think we believe there's going to be a surplus in the second half, around 750,000, 800,000 barrels a day. But, of course, geopolitics can change that very quickly, and we saw it today.
The precious metals rally we've seen, whether it is gold, silver, platinum, which we really don't talk about very much, but has been outperforming gold so far this year. What is driving that?
Right. So gold's been a story initially about central banks buying more of the yellow metal, and then more recently, I think, is investor concerns about dollar weakness, about trade tensions, and frankly, at the end of the day, remember, in a world of de-dollarization, peak U.S. exceptionalism, investors are looking for non-dollar assets, and that's been behind the push for gold. Now, more recently, you talked about platinum. Well, platinum at some point was a third of the price of gold, and gold jewelry demand is down 20% this year, despite the big rally in prices, or rather, because of the big rally in prices. So a small shift, just a 1% shift of that demand from gold into platinum, which is a much smaller market, is triggering a big rally. So we think it's just substitution. People saying, well, you know what, I was going to buy a gold ring, but it's going to be platinum this year because it's a third of the price. So we're seeing a big catch-up trade in the last few weeks.
Francisco, what's your outlook, your thesis on aluminum? How do tariffs affect that?
Well, I mean, aluminum, of course, has been directly tariffed. We've seen initially a 25% figure and then a 50% figure a couple of weeks ago. What this is going to do is it's going to hurt U.S. consumers of aluminum naturally, and I'm not quite sure it's going to help bring those aluminum smelters here. And by the way, aluminum takes 15 megawatt hours per ton of material to be produced. So you're going to be competing between AI and aluminum. What do you want to produce? I think AI is the better is the better use of that incremental electricity that we need in the country. Meanwhile, obviously, some investors may decide to open smelters at the margin, but then, of course, 90% of U.S. aluminum comes from Canada anyway, so it's not coming from that far away. Our view is that prices will push higher over time. Maybe not in the second half of the year, but over time they'll have to push higher because China ultimately is not ramping up capacity, and that requires $3,000 plus per ton to do.